Let's bring in Bill Smead, Chief Investment Officer at Smead Capital Management. Bill, it's good to talk to you. All right, this sort of contrarian view. Tell me what your thesis is about selling into bear rallies.
Well, first off, we took a look at the last 5 decades, the 10 largest cap stocks, asked the question, how did they do if you equally weighted them in the following 10 years against the S&P? And in 4 straight decades, you underperformed the S&P if you owned the 10 largest cap stocks. And in 2 of the 4 cases, you lost money. So the moral of the story is when there is a financial euphoria episode, it's very difficult to put Humpty Dumpty back together again when they fall off. And just take a look and see what's gone on so far. And by the way, bear market rallies typically include extremely violent up moves. So the people that are excited about the turnaround last week and the violent up move, they're basically doing what, that's why they call them sucker rallies, because they just look so enticing that it lures you in.
I'm pretty sure that's what I just said. Look at all of the green on the heat map. That's me. There I am. Okay, so given that, can you give me some specific examples of your contrarian stocks that you would suggest people take a look at?
Well, it's wonderful to be on the show the same half an hour of Brian Moynihan. We bought his stock in 2012, early in the year, and have owned it since then. And he's done a marvelous job. But if you listen to what he said about how they made their money, we've entered a decade where Main Street wins and Wall Street loses, right? They weren't doing any IPOs. They weren't having much investment banking. Wall Street is not doing so well at the moment. Goldman's rearranging the deck chairs. That's struggle. On the other hand, if you're a waitress or a custodian or a cook or a carpenter or a plumber or electrician, you got more work than you know what to do with, and they're paying you way more for it. So the have-nots are going to win for 10 years. That's the way.
Is that why you like Simon Property too?
Yeah, we know that business is better at the Class A malls today than it was at the best point in 2019, and the stocks are at bear market lows. Simon's dropped from 172 down to where it is. And we also own Macerich, which is they've just gotten pummeled. And the reports we get is the stores are doing better and better. Retail stores are doing quite well.
I guess I just heard something that got my attention, and that is that the have-nots of the economy are going to do well over the next decade. A lot of people might say it's about bloody time that they did.
Amen, Tyler. Yeah. Amen.
But it also affects the kinds of stocks that you want to invest in if your thesis is correct.
Absolutely. You know that we've harped for years about how powerful these 92 million millennials will be when they get married, have kids, and form households. I went to a wedding Saturday. I think more people have gotten married this year than any year for 10 years. Yeah. And that will be true next year because they couldn't necessarily get the venue they wanted this year, so they're getting married next year. And so what flows from that is buying houses, buying cars, having children, soccer shoes. I think Contessa can tell us all about that circuit. And what that means is necessity spending rather than the new Apple device, Chipotle, craft beer, exotic travel as a single person. You know the story.
Yeah.
The best stock of the next 30 years might be a psychiatric company that's going to treat 55-year-old bored to tears millennials